Australia's economic collapse. Australia's coming economic collapse that nobody is talking about. And in this video, I want to elaborate a little bit more on our previous video where we talked about the dollar milkshake theory, the euro dollar system, and Australia's foreign exchange reserves crisis, and share some information that I didn't put in that video, which has got some potential dire consequences for Australia's economy. So in our last video, I shared a clip from John Adams, who is an Austrian economist here in Australia, talk about Sri Lanka and what caused their sovereign debt crisis and what caused inflation, their currency to collapse. What I want to do is just go back and share a little clip of that, just a little clip, and then come back and elaborate on a similar thing that is happening in Australia.
One of the key things for our audience to understand is that foreign debt problems don't occur overnight. I mean, they take time to build. And so over the last few years, the Sri Lankan economy has had this huge foreign debt problem, and it has exacerbated with the COVID-19 pandemic. So where a country gets into problems is when you don't have enough foreign exchange reserves, so basically enough reserves of foreign currencies. So when your foreign bills come up, that you don't have enough to pay them. Now, in the context of Sri Lanka this year, 2022, Sri Lanka was required to pay, and is still required to pay, $7 billion of foreign debt. And as of April, they only had about I think $1.5 billion. So they basically have a depleted amount of foreign reserves, and that depletion of foreign reserves has gotten worse over the last couple of years. Now, two really big aspects in the case of the COVID-19 pandemic over 2020 and 2021. One was that they saw a major decline in tourism. And obviously, if you have less tourists with less foreign currency coming into your country, you basically can't collect those foreign US dollars or Chinese yuan or euros, etc. And that was a big factor. The other thing is that they had they banned petroleum-based fertilizer, and this was a disastrous policy that led to food crops in Sri Lanka falling by about 50%, particularly in terms of rice. And so they had a major slump in agricultural exports, which again didn't allow them to generate enough foreign currency reserves. And so this is why this issue became acute, particularly in terms of the beginning of 2022. Now, in the case of the decision around fertilizer, now there is two schools of thought as to why Sri Lanka did this. One is that it was related to climate policy, and that there was some urging from the World Economic Forum to ban petroleum-based fertilizer. Another school of thought, and this is some of the Financial Times of London, suggested that they were nervous about spending foreign exchange reserves on additional fertilizer. And that's why they said, well, we need to try to keep as much foreign currency as we can without spending it willy-nilly. And they basically said to their agricultural sector, we want you to go organic and don't use fertilizer. But that was a disastrous policy. And these are the two key factors that led them to a point of crisis at the beginning of the year.
Okay, so John Adams shared that due to the lockdowns, they had no tourism, but also due to their ESG climate targets. And remember that the World Economic Forum gave them the highest, was it the World Economic Forum? Maybe it was the UN, I can't remember, gave them the highest ESG score in the world. That they took nitrogen away from farmers, they stopped farming and exporting their products overseas, which means they get less US dollars, and that created a big problem for them. Well, guess what Australia is doing? Guess what Australia is doing? we're shutting down coal. South 32, which is a spin-off from BHP, is going to focus on green metals after it has announced that it is going to axe its coal project. So it's getting out of coal. No more coal being shipped overseas. But not to be outdone, its former parent company, BHP, announced plans to close New South Wales' largest coal mine after failing to find a buyer. This is what we've done. We've demonized coal so much that no one wants to touch it. No banks want to lend to fund projects. And now the big miners are simply closing down their coal mines. And this has political support right across the aisle on both sides of politics. And even a former coal miner who's turned MP is backing BHP's early mine closure. So what does that all mean? Well, when we come over to the Observatory of Economic Complexity, this is the latest data we've got, product exports for June 2022, and you can see that coal is our second largest export behind iron ore, 13.3%, behind iron ore of 13.7%. So are we going to stop exporting our coal? We're shutting down the mines. But we're also shutting down coal-fired power stations. Here, Origin Energy to shut Australia's largest coal-fired power plant by 2025. But back to the OEC. So we're going to take our second largest export and stop exporting it. Kind of similar to what Sri Lanka have done. What about other crude minerals? You know, that's a fossil fuel. It's actually hydrocarbon, but they use the words fossil fuel. Are we going to start shutting that down as well? Or what about gas at 5%? What about iron ore? Are we going to start shutting that down too? Are we about to shut down our largest exports? So not only is this going to mean higher energy prices, but we are shutting down our largest exports, which means we're going to receive less US dollars. We've got an almighty debt bubble where we're going to need US dollars. And we're about to do something similar to Sri Lanka in a smaller way. We've got a more complex economy than Sri Lanka. However, we are still doing similar things, all in the name of ESG and the whole climate movement. And this is going to, we already have, if you haven't yet watched that last video I did, I'll put a link in the description. You need to watch it because you're probably not understanding this video. Australia has a foreign exchange reserve crisis where we have nearly $1 trillion in debt with less than 12 months duration. And we do not have the assets. We do not have the FX reserves to meet those requirements. And we're only going to make things worse as time goes on by shutting down our largest or one of our largest exports. Now, you may be saying, Steve, well, aren't you invested in coal and oil and other energy, hydrocarbons? Absolutely, I am. But there are some miners, there are some coal companies that we bought at 1.8 times earnings. There's other coal companies that we've got where we've had 10x returns. One that we currently own is up 8x from when we bought it. Another coal stock, we're about to get an 80% dividend yield. So there are opportunities in this space. You just got to pick the right companies. And once again, for those of you who are interested in seeing more about our own portfolio and seeing exactly which stocks, which assets we own, all of our research and analysis, I highly recommend thinking or consider subscribing to our weekly Finance Uncut Insiders Report, where you'll get all of our assets, all of our positions, all of our stocks, all of our trades, why we're buying, why we're selling. You'll receive it all. Now, we haven't yet launched it. As I said, there is a cost to it. But you'll see these coal stocks that we own, the coal stocks that we're buying, the ones that are paying out an 80% dividend yield on our buy price, those that have gone up 10x, 8x, etc. You'll find out where our next companies are. I talked about a drilling company that we bought. Well, if for those of you who are interested to want to see a sneak peek of what this report is, I've shared a sneak peek of this report in other videos. So if you've already seen that, this is going to be the end of the video. I'm just going to finish this video by giving you guys who haven't yet seen Finance Uncut Insiders Report and what it will look like. I'm actually going to give it to you now. I'm going to share it with you now, where you will actually get a couple of our stocks. So even if you don't sign up to it, you're going to see a couple of our stocks that we own, and one of our stocks that we're currently buying and will continue to buy and accumulate in time. So if you guys have already seen the sneak peek, this is the end of the video. Please hit that like button if you like this video, if you found it valuable. Leave us a comment below. What do you guys think? Do you think Australia is mad doing this? Do you think we are heading into a potential balance of payments crisis, a sovereign debt crisis? This is something that nobody in mainstream media or economics is talking about, except for a couple. So thanks, guys. And here is the Finance Uncut Insiders Report sneak peek. All right, so here we go. Finance Uncut Insiders. Here's the report. This is what it's going to look like. We go through our Austrian economic approach, and why it's so important and why we recommend you guys learn more about it. How we use a combination of Buffett and Greenblatt's fundamental value analysis, and why it works and why it's so good, and how we learnt from these gentlemen how to apply options to our portfolio. Then, as I just mentioned, we break our investment portfolio into 4 parts. And then coming to that now, I'm actually going to share with you guys some stocks that we own. So I'm going to give you a couple of free stocks. So if you don't subscribe to this newsletter service, well, I'm going to give you 2 stocks that we own. So the first one is Stanmore. So Stanmore is a coal stock. It's hard to go past Stanmore, who are acquiring Mitsu's 20% of the South Walker Creek and Poitrel coking coal mine in the Bowen Basin in Queensland, as well as other potential development projects subject to FIRB approval. That's Foreign Investment Review Board. Settlement is $380 million US, subject to adjustments. Stanmore recently purchased 80% of BHP's Mutsi, so they're taking it completely over, and have gained a further 10.5 million tonnes of coal production per annum from existing projects. If we go down a little bit more, so their saleable coal production, 2.8 million tonnes in the first half of 2022. That's up from 1.26 million tonnes in the second half of last year. So they've already doubled that in under a year. Higher realised prices and significant uplift in volumes following the SMC acquisition during the first half of 2022. Seen a record revenue and underlying EBITDA delivered in just the first half 2022 of $726 million. Operational performance led to operating cash flow of $563 million for the first half of 2022. Cash flow significantly improved liquidity, $546 million of cash as at June 30, 2022. So that gives basic earnings per share of 32.37 cents per share. Our buy price was 49 cents in August 2020. That equates to 1.5 times earnings, and we're expecting some pretty big dividend payouts based on our buy price. Now, you can see currently when I added this chart to the newsletter, which was the other day, its shares were trading at $2.21. We currently have that as a hold. We aren't accumulating this stock. Now, we still think this stock has more upside based on a number of factors, based on their current earnings performance. So yeah, but we will, before we start trimming our position on this and taking profits, we want to enjoy some of the big dividends coming our way. So the next stock that I'm going to share with you guys is one that I have recently been talking about. It's a drilling company. DDH1, DDH is the ticker code. It announced an on-market share buyback program on the 1st of July. The proposed number of shares to be acquired over a 12-month period is just over 34 million shares, or 8% of its current capital. Added 15 quality rigs to end of the year with 183 rigs. A further 11 are on order or under build, making it a top 5 largest drill companies globally, or in terms of fleet, the number of rigs. Annualized revenue per rig of 2.9 million. That is up 6.9%, and their outlook is for increased margin per rig, which is fantastic in an inflationary environment. 14% increase in full year 2022 financial year pro forma revenue to 506 million compared to 444 million, above average industry return on invested capital of 27%. Now that is huge, guys. Our rule of thumb is anything above 10% is good, and that's on our radar to look at. So 27%, outstanding. 10% increase in underlying EBITDA. Let me just scroll up a little bit. Underlying, where are we? Underlying EBITDA, 113.6 million compared to 103 million, 22.4% margin. 17.7 million returned to shareholders in dividends, with a dividend policy moving forward of 30 to 50% of operating net profit after tax and amortization, which currently, based on 17.7 million, is 5.37 cents per share. Basic earnings per share, which is based on EBITDA, is 34.47. Our buy price was just in the last several weeks, so we started buying in July and August, was 64 cents, which equates to 1.86 times EBITDA, with an 8.39% dividend yield and growing. Now, when they made that announcement, the share price, you can see, absolutely shot up. So from 64 cents to 85 cents, and we still have this as a buy. So we are still buying this company even at 85 cents. And yeah, I actually wouldn't mind a pullback because this company is dirt cheap, in my opinion. Once again, not financial advice. You guys, go, if you want, go do your own research, run it past your own financial planner, financial advisor, etc., etc. But there's a couple of stocks there. So this is the kind of thing that I'll have in this newsletter, is all of our stocks, all the reports, all the analysis, why we buy a stock, why we sell a stock, and when we're going to sell, as well as all of our options trades. So how we sell options for passive income, like Buffett and Greenblatt do, for compound. So we do own some big stocks, even though our focus is on small cap. We do own large stocks that we simply sell covered calls. We receive about 2% a month, so about 24% a year on average. And, they usually pay a 5-6% dividend yield as well. So we're getting about 30% a year just in income. And what do? We just reinvest it. We don't use that income to live off. We just reinvest it. So compounding it at such a high rate. So, they're boring, the big stocks, but that's why we use it, is simply for the options trade there. So as we continue going down, building an international portfolio, so we talk about the different markets and sectors that we're in and interested in. Outlook, some of our stocks that we've owned and why we've bought particular sectors, why we like small value and resource stocks over other sectors. You guys will love this one. Why we buy junior explorers in two particular market cap quartiles, and that it really says it right there. And then the life cycle of a junior explorer, and why we invest in particular parts. There's times to invest and there's times not to be investing in this sector. And then once again, guys, important disclaimers, not financial advice. We do not accept any liability. This is not a recommendation to buy or to do anything. It's just for entertainment and education purposes only. So there you go. That's the The newsletter, I still have to add the rest of our portfolio in there and all the analysis, but this gives you an example of what it is going to look like. So it's going to be a weekly newsletter. For those of you who are interested, now it's not free. It's not free. It is going to cost $1 a day. So if you can afford $1 a day, that's $365 US per annum. This gives you an annual subscription, a weekly newsletter for an annual subscription. But at the moment, we are going to give, as we launch it, we're going to give 30% off. So it's going to be $255.50 for those of you that do sign up now. If you are interested in it, send me an email. Here's the email address on the screen now. So send me an email. I'll put the email address also in the description of the video, not in the comments. If anyone tries to message you guys that's pretending to be me in the comments, ignore it. I will not tell you to go to some silly app, WhatsApp or whatever. Just check the description of the video. This email address will be down there, and it's the same one as on the screen. So if you're interested in getting this newsletter, send me an email. Let me know what country you're in, and I will give you some payment options, and we'll have this fully decked out with all of our portfolio by next week, and you guys will start to enjoy everything that we do. You'll see everything. So our wins, our losses, you'll see everything. So anyway, guys, if you like this video, please do us a favor and hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.